Hi everybody, my name is Scott, and I think the collapse of Silicon Valley Bank could turn the real estate market around, and here's why. The Federal Reserve has been raising interest rates aggressively over the last year. They've been raising it so aggressively that they may have broken something. And the reason they're doing this is because they were worried about inflation getting out of control. They're trying to get the inflation back to the 2% level where they're comfortable with. I mean, inflation had gone up to 9%, right? And now it's down to about 7%. The Federal Reserve is not happy with this. They want to get it down to 2%. And by continuing to raise this interest rates, what happened was it created a side effect that I don't even think they were prepared for. And that side effect was Silicon Valley Bank and a couple of these other local regional banks went bankrupt. They collapsed. And it wasn't because that the bank didn't have money. They had money, they were not insolvent. But what ended up happening was there was a run on the cash and the depositors decided to take all their cash out. And that caused the banks to not have enough cash. And that's a normal thing. The banks don't keep 100% of their cash reserves in their deposits. They keep 10%. They lend out the other 90% of the money. That's how banks survive. That's how they make money. When people pull their cash out of the Silicon Valley Bank, what happens is it creates a situation where now it's worrying the Federal Reserve. And the Federal Reserve is now taking pause and saying, wait a second, did we go too fast, too quickly? Did we break something along the way? And this can cause interest rates to decrease. It could be possible that the Federal Reserve is gonna take their foot off the gas. Now, obviously, we don't know what they're gonna do yet. I don't even think they know what they're gonna do. But something broke, and they need to figure out what broke and how it's gonna be fixed. Raising interest rates was one of the reasons what caused this, and I think that they're gonna ease off on it, and as a result, mortgage rates and all the lending rates from the banks will probably ease off, and hopefully this will fix this problem. The Federal Reserve raises interest rates, and as they raise interest rates, it's actually the federal fund rate. So that's the rate that the Federal Reserve and banks lend other banks money. SVB bought a bunch of bonds and they were at around like 1.5, 1.6, 1.9%. They decided that they didn't want to hold these bonds because interest rates have gone up so much and that it wasn't necessarily a good investment for SVB. And so they decided to sell off like $1 billion, $2 billion worth of these bank bonds, these bonds. And so what ended up happening was when they started selling off, it freaked out the investors. And then it created this run on the market. The bank wasn't insolvent. What happened was it created fear and uncertainty. It was caused because interest rates were going up and the banks figured, you know what? Let's just get rid of some of these less performing portfolios that we have in hand. And so what happened was it created a fear situation. This fear situation, we don't want it to run rampant across other banks and across investors. So the Federal Reserve now is taking pause and saying, okay, something happened that caused this to break. We need to figure out whether or not continuing to raise interest rates at the rate that they were doing is necessarily the right decision. And this can potentially cause them to ease off the federal lending rate, which then will affect other rates, other loans, and eventually will trickle down to mortgages. Mortgages are not directly related to the federal funding rate. Mortgage rates are tied to something completely different. Typically, it's a 10-year treasury. However, all of these trading and investments all kind of go hand in hand with each other. And so what ends up happening is this creates a cascade. And so hopefully the Federal Reserve won't continue to raise interest rates and there won't be other banks that will collapse. And then we'll see a slow reduction of interest rates for the buyers. I may be way off on this, but I'd love to have a discussion with you in the comments below. Let me know what your thoughts are. Am I wrong? Or do you agree with me? Do I sound like a conspiracy theorist? Anyways, I look forward to reading your comments below. Let me know what you think. Thank you so much for watching. Bye, everybody.